Thank you for the introduction, Mr. Lahoti, and also MK Global Securities for hosting today's earnings call. It is a pleasure to welcome you all to our earnings conference call for the third quarter and 9-month ended period for financial year 2024. Let me first take you through the financial performance of the company for the third quarter, followed by the 9-month ended results for the financial year 2024. After which, I will provide some operational highlights. During the quarter under review, operating revenues amounted to 431 crores, marking a 35% increase quarter on quarter. EBITDA stood at 70 crores, reflecting a quarterly growth of 5%. EBITDA margins for the quarter stood at 16.24%. Profit after tax for the quarter was 535 crores, inclusive of profit on disposal of Ruchi business of 493 crores. Net profit from continued operations was 42 crores, with PAT margins at 9.6%. For the 9-month period under review, the company's operating revenues stood at 1,073 crores, in line with previous year. EBITDA stood at 196 crores, which grew by 19% on a Y-on-Y basis. EBITDA margin was at 18.3%, while the profit after tax stood at 194 crores from continuing operations, with PAT margins at 11.13%. On the operational front, in the quarter under review, the Ruchi sales transaction was concluded, marking a significant milestone, bolstering the balance sheet and furnishing capital for potential inorganic growth. Project revenues rebounded, rising from 130 crores to 214 crores on a quarter-on-quarter basis. The current momentum in project revenues is expected to continue with same resilience. Domestically, both product and aftermarket segments demonstrated robust performance supported by a steady order book. Internationally, notable advancements are anticipated in revenue growth, particularly in South Africa and Sterling, Australia. Thank you. With this, we can now open the floor to question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Mohit from Monarch Networth Capital Limited. Please go ahead, sir.
Sir, a couple of questions. One, your international order book is down by around 45% versus last quarter. Is that because of the divestment of Ruchi? And if you can give some color on the order book, both domestic and as well as international, on the kind of trend that you are seeing, if you can give some insight on that, that would be really great.
The order book, as you correctly pointed out, the international order book has long-term contracts on behalf of Ruchi, which have now been excluded. So that is why it's lower. Otherwise, I think the order book is in line and very well positioned for the medium term, both domestic and international. I think we have a good, strong order book, especially in all three major businesses. And the domestic order book is also robust, both on product and projects. As we have mentioned that, we are more challenged by enhancing our execution presently. The order book in projects remains very strong.
Sir, with the divestment of Ruchi, are we completely exited the nuclear sector segment? We are still serving the nuclear business somehow.
Sorry, could you repeat, please?
So with the divestment of Ruchi, have we exited the nuclear segment business in terms of supplying pumps or the projects towards that segment? Or we still have the capability of serving
exiting Ruchi. We have exited the Ruchi business from nuclear. Yes, domestically we do some pumps for nuclear, which will continue, which was excluded from the transaction.
Understood. Thank you, sir.
Ladies and gentlemen, please press star and 1 to ask questions. The next question is from the line of Chetan Dhruva. Please go ahead, sir.
Yeah, thank you for the opportunity. So I had one question on the comparison of results, both Q3 and 9M to the previous years. So is it that the previous results also have excluded the Rishi transaction? In the sense, is the revenues and the corresponding profit also excluded? Or was that part of the previous year's results?
No, all results are excluding the discontinued operations. And
so
you see a line, there is a line which is showing the status of discontinued operations within the numbers.
Okay. So then why is there that the growth has been quite anemic actually?
Sorry?
If you compare Q3 of FY24 to Q3 of FY23, there has been hardly any growth, and earnings have actually fallen. So what would be the reason for that?
I think the quarter and quarter is a bit challenging because we've had...
Why? I'm talking about year on year, sir.
Yeah, so year on year, I think it's flat, December 31st, 2022 to 2023. And, I think we are going to see a good fourth quarter because last year the second and third quarter was quite good. So, I think we'll see a good fourth quarter and we expect to have growth.
Okay. So is it more like a temporary lull that was there vis-a-vis the previous year caused the small reduction in the PAT?
Yeah, if you see, previous year was quite a remarkable year. We had a very big jump, ramp up from about, 1,000 crore level to 1,800 crore level. And so therefore, we are getting to that same momentum now. And, maybe that sort of jump will not be there, but I see good growth going forward.
Okay. And would you have any out 25?
Yes, same. I think going forward, we are sitting in, the beginning of the end of the last quarter. So I think we see good growth going forward.
Okay. Thank you, sir. And good luck for the current quarter.
Thank you. And the next question is from the line of Sonam from Tata AMC. Please go ahead.
Yeah, hi. Sonam here. Just wanted to, two questions. One, you mentioned that, you are hampered by the execution capacity and bandwidth. So if you could throw some light on, if there is a path forward for enhancing this execution bandwidth. And secondly, now that you have exited the Ruchi business, any plans on what else are you thinking about which could give you a leg up? Otherwise, the scope of growth sort of starts to dim a bit.
Okay, so I think this is interesting. So to clarify first is that we see good growth in the product segments. So the product segments, be it domestic, be it the international product segments, there we are seeing growth traction start. Secondly, the project, as we have mentioned that this quarter we got back on track. So, we did about 240 crores, run rate there. And the supply chain challenge which we had in the first half of the year, that is now resolving. So with a strong order book, I see the project picking up. So with both the products and projects picking up, we will see growth. But we will temper that with the fact that last year we had a considerable growth, as I had pointed out, from 1,000 crore to 1,800 crore level. That sort of growth may take some time to come. But yes, the traction is there and the order books are strong, so we see growth going forward. Further to that, we are looking at, as we have mentioned, proper deployment of this funds that we have now, capital we have, for inorganic expansion, which we see is a good way to grow again.
Further to that, are you looking at inorganic opportunities outside India or in India as well?
Both. Within our core expertise, we are looking at both.
Okay, that's it from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Deepak Purswani from Swan Investments. Please go ahead.
Hi. Hello. Yeah. Hi. Good evening, sir. Sir, sorry to harp it on again on the project-related execution. In this quarter, there has been improvement in terms of the execution, but in overall 9 months, there has been a decline in the revenues. Now, looking in the context, we have the order book to the extent of 3,850 odd crores. How should we look into this improvement in the execution? And also, is it due to the supply side challenges we are still facing in the project, or is there be anything else we should be looking into?
So I think I'll give you a more in-depth perspective there. The project work includes two sides. One is the supply side and one is the construction site work. So the last year, we had a good ramp up in supply side in the first 9 months of the year, and that gave us good revenues there. So in the first half of the year, our supplies were lower due to market supply challenges, but that's picking up. And we are ramping up our construction. So our construction is the major area we have rebounded this year. And we see this constantly increasing. That means quarter on quarter, we would see this execution increasing and improving. So this is, what we are saying is that we are waiting for that to happen before we start booking more orders. That's why I've been focusing on execution.
And sir, in terms of the supply side, the constraint related to the DFI?
Yeah, that's resolved. I resolved from this quarter, and I see it drastically improving in this year. So we will see both sides, the supply side and the construction side, improving, and that should give us the level of growth we are looking for.
So, sir, on the project execution side, how should we look into the Q4 in terms of the numbers?
Better than, considering we are trying to improve on last year, so we have a good job to be done.
Okay, so on the overall basis, project execution level, we should be doing around 900 odd crore for this year as a whole?
Yeah, we're trying to improve on last year. That's our primary target there. Should be possible.
Okay. And then, sir, coming to the pump and accessory business, here also, in this quarter, there has been a decline, and even on the 9-month basis, this growth has also come down to the around 6% in the 9 months on the like-to-like basis. So can you please throw some light in terms of how should we look growth in this segment particularly?
Again, this segment, we are, the good thing, if you see the 9-month figures are at about 600 versus 568 in the previous 9 months. So this segment, we have a strong order book and good execution. So we should see good growth. Again, the growth levels will be not as high as last year. So that's a challenge to temper it,
Okay. And sir, in the 9 months, there has been a sharp rise in the unallocable expenses. Has there been any specific regrouping of the segments which we have done that has led to the higher unallocable expenses? Can you please throw some light on that part as well?
You are talking from the standalone or consolidated?
Consolidated. The unallocable expenses has increased to the 45.7 crore versus 18 crore last year.
Sorry, I don't have this figure. This is The other expenses are for the quarter, you mean, 45 crores versus last year was also 45 crores.
Okay. And, sir, in terms of the tax rate, that has also moved close to the 30% right now. I mean, going ahead, how should we look into this tax rate as a whole?
Which one? Sorry, can you clarify again, please?
Effective tax rate for the 9 month work out to be close to the 30% versus 25.6% last year 9 months.
The tax expense, you mean?
Yeah.
I think the tax is commensurate, it is different. I mean, there is some capital gains tax for this transaction. I think that is included there.
Okay. And then, sir, finally coming to the proceeds from the Rishi, if you can throw some light in terms of the cash position currently. And secondly, in the previous con call, we also mentioned that we will also try to fix up the leakages in the minorities at the holdco level. So are we on path to do that, or how should we look into it in the overall scheme of things?
So I think the first priority was we had, some debt, which we had squared off. That means we had some loans from India to the Group of Turiya, which we have reversed. And then we paid off some other debt which we had for building there. So we have, after debt, still there is a cash level of approximately about 650 crores with borrowings of about 150 crores. So about net 500 crores cash level after that. And the main fact is that we are first looking at growth. I think we are looking at growth and opportunities, which we see quite strong because, a lot of companies are facing challenges in this high interest rate cycle. So if you don't see growth and if you cannot effectively utilize, then we would look at other, things like reversing, the holding. But presently our target is growth. So we will review this, and today, fortunately, we are getting reasonable returns even in fixed deposits in Europe and in India. So it's effectively parked, and we are looking at growth. That's the primary reason today.
Okay. So broadly, sir, at this point of time, we are looking out for the new targets. And if we don't find any interesting target, then only we will look out to increase the stake in the subsidiary.
Yes. I think we will look at the best use. So the best use today is to grow, because we've lost revenues. We want to replace that quickly. And, there are a lot of interesting ideas and markets we want to aggressively enter. So this gives us a lot of strength, and we want to really capitalize on that first. And fortunately, the fixed deposit rates are good, so that's, not a concern right now.
Okay. Thank you. Thanks a lot, sir, and all the best.
Thank you. And the next question is from the line of Mohit from Monarch Networth Capital Limited. Please go ahead, sir.
Sir, just one question. Our profit margins, our operating margins has come down from 19.2% in quarter 3 last fiscal year to around 16%. I think the main raw material for this pump industry is steel, and steel prices have been stable. Any thoughts on what's the reason for the decline in profit margins?
Actually, there's no reason. I think it's what we did have is one. I can point out one small event is that due to this present Middle East crisis and the Suez Canal blockage, which is happening, Europe is affected because our Italian business, their supply chain is affected. Ships have to go all around Africa, so they missed some dispatches in the last quarter, and that will shift to this quarter. So it's if you see the 9-month period, it's 18.27 EBITDA margins. That's more reflective. And, I think the EBITDA percentage is nothing to do with costs, more with revenue.
So going forward, we don't see any further erosion in EBITDA?
No. I think it's a very good environment we have, and we see margins improving only.
Understood. Thank you, sir.
Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Deepak Purswani from Swan Investments. Please go ahead.
Thank you, sir, for the follow-up opportunity. Sir, just continuing on the future acquisition or future targets, just wanted to understand, sir, at this point of time, do we have any current pipeline which we are exploring? Secondly, this would be particularly India-based, or we would be looking more in the abroad market and look to increase exposure in the international market?
So, two things. One is that we want to do these. We have a pipeline. We are already working on a pipeline, and let's hope we can have some good results quickly. And the second is that we're looking at all markets, because of our strong presence now in global markets and Indian markets. I think we have good opportunities in both.
Okay. And sir, in terms of the overall outflow in terms of the acquisition, broadly, we would be looking. What would be the size of acquisition we are looking it out?
I think too early for that. Let us come back to you with some concrete proposals.
Okay. And sir, any threshold which we are looking out in terms of the return metrics when we are looking into these acquisitions?
Yes, I think that is the major challenge, and we have been quite conservative and very focused. So we look at two areas for this. One is the product. The product must enhance our portfolio, and it must enhance our geographical reach. That's one. And secondly is that it should be at a good value so that we can get high returns. If you see our returns from Ruchi or from even our other businesses, considering to the investments we have made in them, that's the sort of line of thinking here again. And I see the environment moving in that direction. So we are not concerned, and we think we have enough opportunities at our valuation expectation.
Okay. Thank you, sir. Thanks a lot, and all the best.
Thank you.
Thank you. And the next question is from the line of Vinay Nadkarni from Hathway Investments Private Limited. Please go ahead.
Yeah. Just wanted to know two things. One is on the Ruchi deal. What was the amount that we actually received? We had some 68 million euros, right? What was the exact amount in rupee terms that we received?
So, approximately, we received 68 million. Part of it is in escrow, which is about 10%. But the rest of the cash we received. So you can take it about 60, so 550, 600, 550, 575 crores.
Okay. Because your cash and cash equivalent for H124 was 273 crores. And you had 300 crores of borrowings. You say that the borrowings now are 150 crores, so you would have paid off 150. And if you have received 650, your total amount should be higher than 500. Is there any capex that we have made in this period?
I am giving you these numbers, what our balance sheet is showing, that we are showing, about the 680 and 150 borrowing. And about 560 is our...
Okay.
The other 500 crore plus is our cash levels right now.
Okay. I mean, I was not getting those numbers.
So there is no other thing. As I said, we received the money on 28th December, and the first thing we did was pay off debt at Ruchi, and that's it. The rest of the money is parked. No other use.
Okay. What is the capex for this year, and how much is it planned for the next year for expansion of capacity?
Very insignificant. Our capex levels are mostly brownfield, and therefore we have, as we have mentioned in the past, large manufacturing infrastructure in our 10 plants. And there's some brownfield expansion in machines and machining capabilities or office space, but nothing significant.
So are we equipped to deliver good results for FY25 as far as the capacities are concerned?
Yes.
And what would be the expected growth, if you can just kind of give us some indication for FY25?
So I think we have a strong order book, and that puts us in a good position. I think, as you mentioned, that we see the project now on both the supply side, with the challenges being removed, and the construction side, moving in line with our targets. So we see good growth in project execution, and the product books are being strong across all businesses. That's a very good place for us to be. We see good growth going forward. However, again, I will temper it that the growth we had last year from 1,000 to 1,800 crore was quite significant. It was a significant milestone, and that is higher than we would expect. Otherwise, good growth going forward.
Can we expect a 20% at least, 20-25% growth?
We expect a good growth. I'll cap it at that, and I think we will see it in quarterly performance now on.
Okay. Thank you very much.
Thank you.
Thank you. And the next question is from the line of Divesh Shrimali from DS Investments. Please go ahead.
Yeah, hi. Could you comment a little bit about the defense vertical, the order book, the trajectory, the margins? How do you see it shaping the overall mix of revenue in the next 1 to 3 years?
Yeah, so defense, as we had mentioned, that was a framework contract, and which positions us very well for the new line of ships which the defense is going to be producing and these ships are the defense has a very big program for the next 30 years. So our development on the framework is going right on track, and we should, as soon as we deliver these framework supplies, we should see good growth. So I think the major revenue tickers will start from second half of next year.
Okay, great. And the current order book that we have, what would be the execution timeline for that, and how is the bid pipeline looking, if at all we are L1 or that side in somewhere? Just some comments.
You mean for which part of our business, or you mean specifically defense?
Sorry, I meant overall order book of 4,000 crore plus that we have. So the execution timeline and the new bookings of all. How does it look like?
So the booking, if you see, the project is on one side, if you see the project order book. So the international order book is about 450 crores, and the domestic product order book would be about 260 crores. So about 700 crores out of this 4,300. So the 700 crores is like a shorter term, so they are not long-term contracts, so they are in and out. So as we see good traction, the 700 crores is giving us good traction going forward in the products. And the project, as we mentioned, that we see the execution constantly improving quarter on quarter from here on, and that should allow us to see good growth. The order book is sufficient because if you saw last year, as somebody pointed out, 800, 900 crore execution level, and the order book for projects is about 3,500. So quite a substantial growth there. Possible.
Got it. And this order book, just broadly, how much time the commitment we have for execution? Is it 2.5 years that we need to?
Yes, you're right. 2.5 years is typically the commitment levels. Though there are sometimes some challenges at site clearances, but typically 2.5 years is there.
Got it. And we sort of called out that we had some execution challenges, but they are sort of working out now. So would that mean that we should start looking at new orders going forward, like we announced last quarter? Are we open to?
We just announced last quarter, and as I mentioned, you can see that we have a sufficient gap here, and I think it's more important to stabilize and the execution and deliver good, outcomes and commission the existing projects to develop customer confidence, and that's the major thrust. And I think the order are not such a challenge.
Got it. Thank you, and wish you all the best.
Thank you.
Thank you. And the next question is from the line of Kanish. Please go ahead.
Hello. Hello. Hello.
Hello. Yes.
Yeah. Am I able to hear? Am I clear?
Yes.
Yeah. Please.
Yeah. This is Janish here. Just have few questions with regard to maybe a little bit of a better understanding on the business environment. What you've been projecting is that getting order is not an issue, but execution is. So my first question is with regard to that, as we are already positioned to deliver, don't need to expand any capacities. Where are the challenge? Is it the material supply which is the challenge, which is now you're getting it, and with the existing kind of a capacity, like whatever the infrastructure we have within the company to deliver, what kind of the size of the business it can support in terms of like revenues, at least in the product business. My second question is on the international side. If you, as now the nuclear business is not there and the other businesses are well positioned, can you just give some understanding as to how are we positioned on the international side when it comes to the user base opportunities for each of the geographies? And just now we mentioned about the Red Sea issue, which is affecting global supply chain. Are we having any challenges and going to face any challenges ahead as a result of this? Thank you.
So to clarify again, that the product business has regular orders, and there we have good order book, and however capacity we can do more, so that's not a problem. And the project side is the only one, because we had a good ramp up and we received some good contracts which we are working on. And my point is that at 900 crore level with a 33,500 minus O&M about 2,900 order book, and the general delivery period is 2.5 years. So we have to wait for our execution to pick up there before we get more aggressive on the order book. So it's commensurate with our execution levels in the project. And we are working more on the thrust is more on the execution ramp up. Execution ramp up is natural progression as the company builds size, and it's nothing to do with any major challenge. The supply chain was a disturbance in the first half of the year. It's improving, and therefore we see quarter on quarter good progress going forward. And internationally, we had the transit times from Asia to Europe has increased by 1 month. So we missed certain components which could have allowed us some dispatches in December quarter, which have shifted to this quarter. So nothing major, but however the shipment times are longer by 4 weeks because they have to go around the Gulf. So that is a bit of a hindrance. So no major areas of hindrance, but the order book remains strong.
Yeah. If you can just give us some understanding on the user industries, which are the user industries right now contributing to the good outlook for the growth or order book in terms of the product business internationally and domestically? Can you throw some light?
Yeah. So primarily we are finding that in India, primarily the industrial segment is improving. So we see a lot of contracts from steel, oil and gas in India. And the municipal segment is very strong because of the focus on the Jal Jeevan and the Swachh Bharat missions. Irrigation is a bit subdued, and hopefully that should pick up next year. And internationally, we are more, again, the same. The oil and gas is a very strong market for us, primarily in Australia and Italy, doing very well. And the municipal water supply markets and in South Africa, it is the mining market which is very strong and the water supply market. So all across the space, we operate in all areas. But today, I would say industry is and oil and gas primarily is on a buoyant phase.
Just to dwell a little bit on the to get a little bit an understanding better on the execution. I think on the project side last year, you had 880 crore of revenues. I think last quarter, again, you alluded to the problems and said that second half should pick up. And for the full year, like 1,100 crore is a revenue kind of a possibility which you showed up. And even when we are looking at the order book today and the execution run rate which you just just said, it is quite possible. So what we could infer is that this year it can be like 1,000 crore, and next year you need to step up to a run rate of, let's say, 1,400, 1,500 crore in project business, and a growth of maybe 15 to 20% in the pump business or a product business. Is that how we should be looking at going ahead as far as the visibility goes for your business from current level? Just wanted your thoughts on this. Thanks.
I would cap it that we will see good growth across all segments, be it domestic product, international product, and the project. The project, as you have correctly pointed out, the supply chains, we lost half a year, so that has affected us this year. Otherwise, we could have got a higher, the growth levels. However, it's picked up, so there is a shift which has happened, and through the second half of this year and into next year, we see good traction across both the supply side and the construction side. And, I think we are confident of this, growth. But again, radical growth from these levels is not on the, radar yet. It will be more consistent.
Yeah. And just a last question. Is there any change in the working capital cycle across your business in terms of like in India or outside? Is there going to be a change in that?
No, nothing to point out as of now.
Okay, thank you. Thank you very much.
Thank you. And the next question is from the line of Vinay Nadkarni from Hathway Investments Private Limited. Please go ahead, sir.
Yeah, just one small question and last question actually. The figures that you have given for standalone and for consolidated, I presume the difference between them will be your international business, right?
Yes.
Okay, when I look at your Q3 and Q4, Q3 last year and Q3 this year, your international business seems to have dropped EBITDA margin from 22% to 11%. Now, you have said that the Ruchi numbers have been removed from your figures. So I presume that this 22.2 is on a business as usual year that we had earned last year, and this year it is 11%. Is there any particular reason why there is such a big drop?
As I said, quarter on quarter, as I said, the margin is not the challenge, it's the revenue. And if the revenue shifts, the EBITDA gets affected. But if you see the 9-month figure, the consolidated EBITDA is at 18.27 versus the standalone at 17.64. So I think the 9-month is more rational, and the year-on-year, the yearly numbers and the period numbers are more thing, because you can easily have a shift of revenue from one quarter to another.
Yeah, I asked because both these are only products. There is no project in international, so therefore
no. Even in product, if you say 5 million of revenue shifts from one quarter to another, that would affect the EBITDA.
Okay. And last thing, can you just give us some indication on what will be the EBITDA of a product division and how much would be of the projects division, both internationally and locally?
Today we have a standalone performance of 19% on the quarter 3.
Yeah.
And 9 month is 17.64. And so I think, the 9-month figure and the console 18.27, these are indicative of the business. So we see stable across all. It's not that one part is, that's why we are, we are not ramping up because in project also, because we have to maintain the EBITDA and the contracts also. So I think the guideline is clear that this margin is very critical for us. So 17.64 standalone and 18.27 console, these are the benchmark figures we can have.
Okay. So no breakup between product and project for local market.
There is, but I think 17.64 covers that.
Okay. Sure. Thank you.
Right.
That's all from me.
Thank you. And the next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, namaskar sir, and Agarwalji, I'm late in joining the call, so if my question is repetitive, kindly pardon me. Sir, in terms of now the asset, our transaction is now consummated. How are we looking to utilize the fund going ahead? Have you worked out the nitty-gritty of the same, sir?
I think the first step was that we have paid off some debt which we had. So, because it was why waste, why spend on interest. And secondly, we have now parked it in bank fixed deposits. And we are looking for opportunities for growth. That is the first focus. And we will review in case opportunities are getting delayed or some better avenue comes up. But today, the first thing is to grow, and certain inorganic growth options are there, which we are actively pursuing.
Okay, and which segment, sir, which we are looking into?
Core. Our core, we are in this space of flow solutions is what we are doing. So both India and internationally, we want to pursue in this area.
No, sir, in the pump category also, which point, specifically to...
All across all. Whatever we find as good opportunities, yeah.
Sir, is there any one-off line item for other expenses for this quarter, sir? Because although there is an increase in revenue, but there is also an increase in the other expenses to 56 crore for this quarter. So what should one read into the other expenses line item?
Sorry, which one? You're saying console or?
I'm talking at the console part, sir. Yes, sir, right. For consolidated,
there is in the quarter 56 crore.
Yes, sir.
Other expenses at 45, which are in line with last year.
Okay, I looked at, sorry, it's the employee benefit expenses, sorry. Correct me there. So if you could give employee benefit expenses have gone up to 56 crore. So any one-off part, or is it with the commensurate of the...
No, I think this is one which is that we have been ramping up our project business. So two of our businesses are in big growth mode. One is in Australia and one is in India with the project business. So multiple sites have opened up. So these 9 months we have expanded here. So each site has employees.
Okay. So last 2 points only, and then I'll join the queue. Firstly, sir, we have always found that Q4 pertains to be is likely be the biggest quarter in terms of order closures and also in terms of deliverables. So in the likelihood, can we expect as a percentage of total sales we do Q4 to be a large number, firstly? And sir, secondly, for the pumps and the accessory segment, we found a dip in margin Q-on-Q and also year-on-year. So what explains this dip in margin? I'm talking about the console level, wherein I think so the EBIT number of 63, we have 37 this time, and Q-on-Q it is 36 versus 45. So what explains the dip in the pump and accessory percentage margin? If you could just throw some light.
No, I think as I mentioned that all our console number of 9 months, the EBITDA margin is 18.27%. The Q3 console number is 16.24%. The standalone was 19% in Q3. So 18.27, some revenue shifted in international business from the third quarter to fourth quarter, which I think the revenue shift affects margin for us, EBITDA margin, not the cost increase. So I think in this quarter we should have a good fourth quarter, which is typical for us, and we are also working hard at it.
Both segments will perform adequately, and we should look at this 20% growth which you have. I think so the number which we are working with.
We are working. We are working. This is a good quarter, and all our businesses are strongly positioned. So we see, especially in the project, the traction being maintained, and a good fourth quarter is typical for us.
It's typical because why I'm harping on the point is we are flat on the revenue for the 9 months on a console level. Although the profitability is higher because of higher project contribution. So if we take the top line for last year as the base of 1,600 crores, we should look at a growth on that number. That is what I'm penciling in. That assumption is correct, sir?
Yeah, one more thing I think there is a second quarter revenue console was 348, third quarter was 430. So it's typical of the trend that the third and fourth quarters are, higher growth.
Okay, sir. And so margins will be restored going ahead. This is what...
As I well mentioned, our margins are totally dependent on revenue, not on costs. That means if the revenue, our margin being consistent, gross margins, if the revenue is there, then the EBITDA margin would improve.
Correct. Right. Thank you for the answer, sir, and we'll get back into it. Thank you, and all the best, sir.
Thank you.
Thank you. And the next question is from the line of Vinay Rokadia, an individual investor. Please go ahead.
Hello. Hello.
Hello.
Of the current order book, can you just give the breakup between the project and the product?
Yes. The order book in India is about 3,800 crores, out of which you can take 260, so about 3,500 plus something is the project, and about 260 is the product.
Okay. And what is the average time period of the completion of the project?
Yes, 2.5 years, about
2.5 years.
24 to 30 months.
Okay, thank you, sir.
As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
So thank you, everyone, and thank you, MK Global, for hosting this. Wishing you all the best. Thank you.
On On behalf of Emkay Global Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.